Happy Friday, Eric Bible with the Bible team at Neil Home Loans. I hope you all had an exceptional 4th of July holiday and were able to really enjoy and embrace all that the wonderful holiday has to offer. On the other hand, unfortunately, mortgage market did not get the memo, nor do they share in our celebration, as this week yet again proved to be another uphill battle for mortgage rates, our buyers and sellers. Really today, I want to break down what occurred, why, and where we see things going from here. So this week, where yes, it was a short week, it was data driven, specific to employment information. We ultimately received 2 reports. There was some confliction within the reports, but it ultimately painted a picture of a very robust labor market, which is one of the main concerns of the Fed on their continued fight towards bringing inflation down in line with their goals of 2%. So Thursday, ADP released jobs information. Now, ADP, private company, data that they disseminate is not what the Fed is specifically focused on, but the market can move on that data. ADP will monitor new payrolls created and in turn report month over month. Market was anticipating 228,000 jobs created. ADP showed 497,000, a very significant miss. And that miss created a significant sell-off within mortgage-backed securities. And I included a graph in the body of the email showing the response to that data miss. Red is bad, indicating mortgage rates moving higher. This data ultimately drove rates out of that 6 range that we've been in for really the last few weeks, the high 6s, into now the low 7s. However, there's some confliction because ultimately, as we know, the Fed does not look at ADP as policy decision-making guidance. They look specifically to the Bureau of Labor and Statistics jobs report, which was released this morning. This painted a slightly different picture. Markets were anticipating 225,000 jobs created, unemployment lowering from 3.7 to 3.6. However, BLS reported 209,000, so a miss in our favor. Unemployment came in at expectation. So really there's some confliction in the market is where it's still early. It's time to digest what this information means and really what the Fed will do with this new information in hand. Also looking back to the chart for mortgage-backed securities, you see based on the data this morning, there is some clawback from some of the losses that occurred yesterday. So ultimately time will tell how the market really dissects this report released this morning, and in turn what the Fed will do later this month with rate decisions. The facts still are labor market showing consecutive month over month 200,000 plus new jobs created. It's still really indicating that there is strength within the labor market, which in turn is inflationary. So the Fed definitely has a little bit of an uphill battle with deciding where things go from here. Ultimately, though, there are signs across the board that the economy is slowing down. We're seeing this in manufacturing data. We're seeing this in the cost of oil. The list goes on. And at some point, this data is going to converge. And in turn, the Fed is going to have to make a policy stance shift. So where, yes, it feels incredibly uncomfortable at the moment, this can't sustain forever. There will be light at the end of this tunnel, and the light is starting to get a little bit brighter. So just buckle up, hold on. It will get better. We're confident of that. One thing, though, that was in positive stride this week was within some of the Fed president's comments. Lori Logan out of Dallas came out and said she believes that housing has bottomed out. And she's looking really at data in the rearview mirror. And, this has been confirmed with some of the Black Knight, CoreLogic, home price appreciations. Both March and April have posted positive gains on appreciation. So really this continued narrative that housing market's going to crash. Well, the Fed is confirming we believe the worst is behind us. And it's being confirmed with how homes are selling, the fact that inventory is still incredibly tight. And throughout the United States, we're seeing multiple offers become really the norm. So the message continues, the message to our buyers needs to continue to be the same. Take action now. Where yes, rates are uncomfortable, they have elevated yet again. The opportunity to secure homes or property in this current market, use it to your advantage. As we know, we've seen time and time again throughout the last 12 months, as rates correct and come down, inventory levels where they're at, the competition ratchets up significantly. Now that buyers are more confident and comfortable with where rates are, competition's only going to get more fierce as rates continue to come down. So hang in there. It's going to get better. If you need help getting this message out to your client base, we are here to support you. I would love the opportunity to help. Also, I've included a national housing survey in the link below. Very useful information. I'll be sharing the findings next week, but take 30 seconds to complete it. We truly appreciate it. As always, make it a great day, make it a great weekend, and talk to you soon.